My name is Brian Watkins, and this is our tutorial for the QuickBooks final exam. I've tried to create a fifth homework assignment that comes close to what you might expect on the exam. I'm sure you'll tell me whether I succeeded or not, but let's get started with it. Be sure you have it printed out when you start. We're going to do a skateboard manufacturing company. So our company name says Island Boards with your initials. Okay, and it's going to be retail shop or online commerce. Let's see here. Because we're going to be selling them. Okay, and we're not going to be having any employees who are going to be doing the work. We're going to do the work ourselves. And this is going to be a partnership. So we'll continue. Create the file, and I'll pause while this works. Okay, and now we see the start working screen, which will take us to our home screen here eventually. Okay, and here we go. So now we need to set up our taxes and our inventory. So we'll close stuff there. We'll go to Edit, Preferences, do the taxes first, Sales Tax. We will charge sales tax. We're going to add an item. I'm going to call it Sales Tax. It's going to be 7% and State Tax Authority. And we'll do a quick add here. So that's now in the list. See? Okay. And it will want to close on us. We'll hit OK to this. And then we'll come back. And this time we're going to turn on items in inventory. Inventory purchase orders are active. Okay. And go home. Here we go. Now, I'm sorry, but this is... Let me see if I can make QuickBooks behave here a little better. There we go. Perfect. Okay, to start, we're going to do our initial investment. So, now that's the problem. Now I can't see. So I'm going back to the regular one. Okay, so we're going to go do our bank account. It's going to be Bank of Laie. And I hope you realize by now this is the only time you will ever do anything with account type bank. So now we have our make deposits. And our date is July 5th. Our received from is going to be an other. It's one of our investors, and it's going to be, bring it back here, it's called Risky Ventures LLC. They're our partner. Risky Ventures is going to put some equity in. They're going to do it in the form of a check. So funding from Risky Ventures. And let's see, check $25,000. Alright, so we check the date, July 5th, Risky Ventures, Partner 1 Equity, and we've got our Bank of Laie set up. Save and close. Don't worry about the date warning. Oh, there goes the beep. Let's, well, if you were in the testing center, you would turn the beep off by going to Preferences, and you would turn that off. I'm not going to worry too much about it here. July 10th, prepare and send purchase order number 1. There's purchase orders. So, purchase order number 1, it's automatic. It's now July 10th. And our vendor is going to be Warehouse Skateboards. Warehouse Skateboards. We'll do a quick add. So I hit enter. It says add. So it's now on the list. Make sure you always get it on the list. And the item, first item is going to be an inventory part. It's going to be trucks. Okay. Trucks. They come in pairs. Well, I'm going to need to have some kind of information somewhere. They cost 50. I should put it up here in the name. Pair of trucks. Okay? That's the name. They cost 50. We're not going to sell just trucks, so I'm not going to worry about a sales price because I'm going to assemble them into something else. But I'm going to get 100 pairs of them. Okay. I'm also going to order wheels. Let's get the wheels in here. Set of 4. Okay. Wheels, wheels, and wheels. Okay. If you want, we can put the description on there. I actually looked them up. Satori Goo Ball Wheels. How about that? And the cost is $35 per set. Okay, income merchandise sales. And we'll hit OK. Now, you can go to items and services up here in the company. And anything that you've done, see the trucks here? I can double click on that. I don't want to look at the new feature. And I can, for example, describe my trucks better. Tensor magnesium trucks. So that's just a little hint there. If you have screwed something up, you can blow this up so that you can see it better. I'll put it back down here. You can always move these and look. But that's how you fix any item problem that you have. You go to items and services. Okay, so let's go back to our purchase order. We have the wheels, the 100 pairs, so we're going to get 100 sets of wheels because we're aiming for 100 boards. Okay, so that's our order, and the date is the 10th. It says shipping costs will be determined and billed later, so let's do memo. This is the trucks and wheels order. 710. Double check. Warehouse skateboards. Good. Purchase order done. So now let's do purchase order number 2. It's also the 10th. And our vendor is going to be Koa Lumber. Quick add. And we're going to buy lumber for an inventory part. And what we're going to do here is we're just going to do an estimate. This is going to be lumber. Rather than go into creating another category of inventory, which you can do if you go into the manufacturing, we're just going to call these decks. Okay, the flat part of the surfboard is the deck. And put these in here. The cost, we are going to buy $3,750 worth of lumber. Okay? We think, given our best estimate, that this amount of lumber will give us enough for 100 skateboards. So just do the math. That means you've got $3,750 each. So oftentimes in business, you just have to make the best estimate you can. So I'm going to buy 100 of these decks at $3,750, but you and I and everyone else knows this is just an estimate. We may have to fix it later. Okay, so it's 710 decks, everything's good. Save and close. Okay, so now we've ordered our stuff. On July 15th, we make a decision that we're going to put some money in the company. We don't like these terms. So essentially, we're going to make a loan. The loan is going to be from a vendor. Okay? However, ultimately, it says here that the company is going to be responsible for that loan. Okay, so what we're going to do now is create a vendor relationship with our lender. That's going to be First Hawaiian Bank. Okay, they're a vendor. They're another business that we're doing business with. And we're going to receive from, and this is going to be, where is it here? This is going to be a long-term liability. So I'm just going to say loan, continue. And this is a long-term liability. And this is first, actually note payable, First Hawaiian. Won't take any more than that, so I'll just leave it right there. Save and close. Okay, so that's our note payable, and this is loan. Just leave it for loan. They're going to give us, well, let's just assume they give us a cashier's check. Same as cash, $25,000. This is on the 15th. Okay. So that note is going to be structured in some way, probably, so that if the business fails, I'm responsible for it. But we don't have to worry about the legalities of it. We're just looking at the fact that we have a loan. So we're going to save and close. And if we were to check, push this up here, we'd look at our reports at this point and look at a balance sheet. And it's now July 15th. Refresh. And we've got $50,000, and we're funded $25,000 by equity and $25,000 by debt. And I'm responsible for that debt. So as it gets paid off, basically legally I'm going to adjust the partnership book so I get a higher share. But for right now, we'll just leave that. Since the company's going to help us pay the note, we'll just go from there. Alright, so now we go and we take our truck down to pick up the lumber, July 20th. So we're going to receive inventory. It says we have a bill. It's now the 20th. And there's a bill for $4,000. Let's see, we're picking up the lumber. Yes, we're going to receive against the order. And we know we have $3,750, but there's an extra $250 for the shipping. So I changed that to $4,000. Okay, there we go. The terms are due and payable on receipt. Okay. This is Coalwood. Alright, 4,000, everything's fine. 20th. Coalwood decks. Alright, save and close. And we'll have it show up the same way next time. Now here's a wrinkle. You're going to reimburse yourself for the business use of your vehicle. You have a total of 198 miles, 33 miles each way. So let's do the math. We're taking the IRS mileage rate, 0.565, and 198. That means we write ourselves a check for $111.87. So pay the order of you. Okay. And this is going to be for an automobile expense, business use of your truck. But let's take a look. This is purely for inventory. So we're going to need to drop that into inventory. So we're going to create our inventory account. So this is an other. And we'll make it an other expense. Call it inventory adjustment. Now, the whole purpose of this account is it's just a placeholder to add money to those what was it? The koa wood. We're adding to the koa wood. And this is going to be 11187. See here these two little boxes, online payment to be printed? There you go. We're now check number 1. And 1187, cost of using car to pick up lumber. Alright. Reimbursements. Reimbursement for use of a car. 720, 111, save and close. Alright, now the minute we've done that, go over to inventory activities, and we're going to adjust the value on hand. I'm going to look for the koa wood, and we're going to adjust the value. And the adjustment count is the one we just created, so it's going to take the money we just took, and our new value is going to be 411187. Okay, to place, move delivery, or actually car expense to the wood inventory. Okay, so there we go. Now there's our new value. Save and close. Remember, with your inventory adjustments, you should do it immediately. You should never have any money in the inventory adjustment account. That takes care of July 20th. Okay, so now we find out that we need more woodworking equipment. So we're going to write a check. We're going to add a vendor here named Woodcraft Honolulu. And it's now 22nd. And we're going to put this in a fixed asset. This is furniture and equipment. Okay. And we're going to spend 8794.80 on woodworking equipment. And if you were going to be doing this through the year end, you'd create sub-accounts for the accumulated depreciation and the book value. But we're not going to do that this time. Let's see. We're going to put it on our Woodcraft credit account. Oh, look at that. So now what we're going to do is create a liability. Here I am writing a check. Let's do this. Let's clear the check. Okay. And what we're going to do is enter a bill. Okay, and the bill is going to have, this is going to be Woodcraft of Honolulu. And we're going to be doing this on July 22nd. Okay. And this is going to be for fixed assets in the amount of 8794.80 with terms of 210 net 30, which is already in there. Good. Alright, so furniture and equipment. This is additional woodworking equipment. Now, why have I entered it as a bill? Because now I've set up that I'm going to owe this vendor, because they haven't sent me the actual bill yet. I just signed the credit slip probably at the store. But this way it reminds me that my discount date is going to approach on the 1st of August. And I have everything all set in my books. So we're going to book them as furniture and equipment fixed account. Okay, there we go. Now we're going to get our skateboard parts. So we receive inventory with a bill. It's now July 24th. And Warehouse Skateboards, I believe. And we're going to open the purchase order. Good. They're going to give us terms. Due in 30 days. Those are the terms. Skateboard, trucks, and wheels. And let's see. The bill is $8,500, right? Shipping costs were $120, but this is due and payable not to Warehouse Skateboards, but to A1 Shipping. And you must use check number 2 to immediately pay the driver. Okay, so we've got our bill, and they're going to leave the goods for us with the bill. So we'll check the date again, 24th. Save and close. But we've got to write a check to the driver right away. So we're going to write a check to A1 Shipping Inc. This is what's called cash on delivery. A1 Shipping Inc. And this is going to be some kind of delivery. Do they have delivery expense? I don't see a delivery expense. Shipping expense, maybe? Repairs. Okay, so we'll create an expense. Make sure that you create as an expense. The only other thing you ever do is inventory adjustment, because when I ask you at the end of the test to give me your total expenses, QuickBooks will divide other expenses from the total expenses, and you'll get the number wrong. Just remember, always open as an expense. And this is going to be delivery. Or to say freight in. Okay. Now, my freight in has 2 different places it needs to go. So I'm going to have to take out of freight in and put it in inventory adjustment, because it's not a general expense at all. It's going to go specifically to those items of inventory that I'm going to sell. And let's see, that is July 24th. And I have to do an allocation based on the total value of the trucks and the total value of the wheels to the total value of the $8,500. So I've done the math. Essentially, you just put the price of the wheels over $8,500 and multiply times that, and then you do the same for the other one. But together, we're going to put $120 in the inventory adjustment. So payment for shipping skateboard parts. 24th, 120, A1 shipping. Save and close. Good. Now we've got to immediately get that inventory adjustment put where it's supposed to be. So we're going to adjust value only, and the trucks were 5,000 of the 8,500, which is 59% of the whole, times 120 gives me $70.59. So there's the new value of the trucks. Now I've got to do the wheels. So I have 3,500 over 8,000 is 44%, times 120 is 5,250. So 3,552.50. Come on, go in. I was in the wrong box. Wheels. Here's where I want to be. 3,552.50. Alright, save and close. I've got it in there. Let me just check here. Total value of adjustment 123.09 is not right. Oh, I multiplied times the wrong amount. So let's say the difference 70.59. This is not 52.50. This one should be 49.41. There we go. Sorry, I did the wrong math. 120. That's the right amount. And if I had any question, I would go to reports, company financial, profit and loss. I would make sure that I was looking from, that's good, whenever I started to, it's now July 24th. So I'll go past that. And I look at it and I want to make sure inventory adjustment is 0. Good. I don't want to ever leave any money in that. It's just a way to get around a problem in QuickBooks itself. QuickBooks does not have, I understand that they're working on a feature, but they made it difficult to account for inventory. Alright, July 26th, we're going to get some artwork. Okay, and now we start making it a little more complicated because there's not enough for everything. So artwork would be action graphics. We could do a quick ad this time. And action graphics is going to give us artwork to be used to complete the board. So we're going to have a new item here. And what we're going to do is graphics. We'll just call it graphics. Graphics. And we have $540 for enough for 50 boards. So it's going to be $10.80. Merchandise sales. And we're going to buy 50 of them. So if I recalculate, there's 540. And you saw what I did. I had to do a little different than I had before. Because we bought it and we didn't go through the process of doing a purchase order or receiving inventory, we went right to the items and defined it there. Okay, I could have selected a purchase order, but we didn't. Alright, so that's check number 3, July 26th. Graphics. Okay, we're going to do another one. This time we're going to write check number 4. Okay, quick add. And this is going to be the non-skid coating. Non-skid coating. Non-skid coating. And we have to figure out how much. So it's $450. We have enough for 100 boards. That's $450 per board. And again, this is the best estimate we have. The better your estimates, the better your cost information, and the more meaningful your accounting. But sometimes you just have to make estimates. So we have 100 at $450, comes to a total of $450. Enough for 100 boards. Done. Non-skid coating. And save and close. Okay, now we're on July 31st. We've managed to produce 37 decks out of the wood we bought. And now it appears that we have 37 complete and wood for 17 more. So that means we thought we'd get 100, but we really are only getting 54. So we're going to have to go to inventory now. And we're going to have to make an adjustment to the value. So let's go to quantity and total value. Okay, and we're going to look at the decks. Right now we have 100 on hand, and now we're going to have, let's see, average cost per item 4111, and the value is 4,111.87. That's going to be our new value, 4,111.87, because we're not changing the amount of money that we've spent for the wood. What we're changing is the fact that we only have 54, where we thought we'd have 100. Okay, so override that value. We want that value to still be the same. Come on, fighting with QuickBooks here. I'm going to write this down. 4,111.87. Okay, and my new quantity is going to be 54. And my new value, I'm going to override, is going to be 4,111.87. So now my average cost per item has gone way up because I didn't get as much out of the wood that I bought. So to adjust for bad estimate, well, it wasn't a bad estimate, to adjust estimate of estimated use of wood. How's that? Okay, so it's the 26. So understand what we've done. We thought we had 100, but after we've worked on this, we now figure out that we're only going to get 54 out of those materials. The materials are still worth the same amount of money, but now we have to make sure our average cost per item changes. This is one of those things that is easier done with this adjustment. So we'll save and close. Okay, and let's finish the July 31st. Now we're going to assemble as many skateboards as we can. We're going to sell those things for $300. So we're going to build assembly. We're going to call it a skateboard. Okay, and skateboard. We're going to sell the thing for $300 in a merchandise sales account. Now we got to do our materials. So we're going to use one deck. I don't know why it's telling me cost is $37.50. 7/26/2013. That's the problem. Cancel that, and let's change this to 31. And before I do anything, I want to check my inventory. So we're going to check the inventory as of July 31st. And my decks have an average cost of $76.15. Okay. Don't want to make a mistake with that. So we're going to add a new assembly skateboard. Skateboard. $300. Merchandise sales. And a deck. Oh, come on. Why is it doing that? Well, we'll just have to overturn it. Edit item. Okay. And the deck is now 4111.87. And we learned there were 54 of them. So it's 76.15. And here's an example of where QuickBooks gets you lulled into a false sense of security because it's so easy to do all kinds of things. But inventory is something that just, I think it's the weak part of the program. So you have to make sure you know what you're doing. And it says right here that we have on hand an average of 14574. So we're going to reset that cost right now. Make sure that our bill of materials is correct. So if we've done it now, $76.15 for one deck, we're going to get a pair of trucks. We're going to get a set of wheels. We're going to get, where is it here? The trucks and the wheels aren't giving me their prices either. So let's edit this. Right now the average cost is $50.71. So let's change that to 50.71. Okay, and let's change those wheels. Wheels average cost is $35.49. Remember, we had that shipping cost that we have to put over all of these. Alright, so now we've got those right. We have graphics. Remember, we divided the cost already to come up with the 1080. And then we have non-skid coating, which we came up with $450. Okay, did we get them all? Decks, graphics, good. So that means that our complete bill of materials is $177.65. Okay, how many can we build? Maximum number we could build would be 50. Remember that our Koa wood decks here it's an estimate. We have only completed 37. So we know we're going to build 37 because that's how many decks we've completed. So I'll say the first assembly. And it's now July 31st. Good. So we're going to build. Done. Finally, you pay the lumber bill with check number 5. So let's pay bills. And Koa lumber. Due on receipt. It's the 31st. Assign check number. So we'll pay the bill. It's going to be check number 5. In the amount of $4,000. Everything looks good. So we've now paid that bill. Okay, August 6th. Your July checking account statement arrives. The balance is. So now we're going to reconcile the account statement. Alright, so we're going to change the statement date to August 6th. Okay, actually it says the balance, the statement date was August 5th. Okay, the ending balance is 49841.88. Got to enter that straight. Now service charges as of August 6th. Okay, it says we had a service charge of $5, and the account would be bank service charges. And then we also had interest earned, because we had a lot of money in the account there, $68.75 interest earned, and that comes from, okay, we'll have to add a new other income. Show me examples. Interest income, interest earned on bank accounts. Good. Save and close. So now we've got the first screen is done. Most important thing is you get that ending balance right. Okay, now we go forward. Here is the reconciliation screen. It says checks 3, 4, and 5 have not cleared. So 1 and 2 have cleared. Deposits have been made. And I've got a difference here of $10. $10. Let me pause this while I go find out where my $10 came from. Okay, here's the problem. Let's go back. Let's leave. Let's go back to our reconciliation. And where I put 4-1, let's try get that number right. So I have actually 3188. Let's try this. So we'll continue, and now I have zero difference. So you can see I made the same mistake that I was warning you about. You have to be really careful when you put in the balance from the test. So if I put that in, once everything goes to zero, then and only then, when that is zero, do I reconcile. And it should tell me that I had a successful reconciliation. Congratulations, you're balanced, and I can display those reports. I'm not going to need them right now, but if I ask you for them, that's where it is. But essentially, if you go past this screen and there's not a zero there, you're going to be doing the exercise again, because you have to find your error. That's the whole purpose of reconciliation. Alright, so we've done the reconciliation. Now, if I did want to go see the reports, you could go back to banking, previous reconciliation, and there'll be a date here, and I can display them anytime I want. Okay, so I've reconciled my account. Now I'm going to do a credit sale. Oahu Boards has ordered Oahu Boards. Quick ad. It's now the 8th of August, and they've ordered 25 skateboards. 25 skateboards. It's $7,500. There's my tax. And I'm going to extend them terms of 215 net 30. So I have to add that. 215 net 30. That means the net is due in 30 days. Discount percentage is 2%. Discount if paid within 15 days. Okay, there's the terms. Ship the skateboards today. Alright, so if we got everything done, 8/5 first sale of boards. Taxable. Save and close. Okay, August 16th, we finish and assemble another 10 skateboards. You pay the bill owed to Warehouse Skateboards, check number 6. So first, let's go up, what you can't see here, let me scoot this over. We're going to build assemblies. We're going to build skateboards. It says we have enough to build 13, which is great because we're going to build 10. That's exactly what it says. We're going to build another 10 skateboards. I'll call it the second build. It's also on the 8th. Or no, that's the 16th. Ah, those dates. Okay. So now I've built the boards, and it says pay the bill owed to Warehouse Skateboards with check number 6. Pay bill, Warehouse Skateboards. Doesn't look like I get a discount, and I'm going to pay it with check on the 16th. Number 6. Okay, I'm done. Paid my bill. Okay, now after I've paid that bill, August 20th, I'm going to get my Oahu boards check. Okay, and they're going to give me 7864.50. Let's see, it's now the 20th. And there's an underpayment. Okay. Well, let's take a look at discounts and credits. It looks like they've earned a discount, so we'll give them their discount, and everything balances. And now we know why their check was low. So, payment by Oahu Boards, and they got their credit. Okay. Save and close. Now we're going to pay another bill on the 20th. So pay a bill, and it's now the 20th. It's due on the 21st. We missed our discount, which would have been a good thing to get. We'll assign check number 7 and pay the let's see, it's $8,794.80. Feels good to pay big bills. Done. Okay, now using check number 8, we're going to make a loan payment. Our loan is with First Hawaiian Bank. It's the 21st. And we know that our interest expense is 166.67. So first month interest on loan. Anything left over is a payment of principal, which goes back to the note payable. So we get out our calculator and we say 506.91, 166.67 minus, so it's 340.24. Now let's recalculate, make sure that 506.91, that's the amount of the bill. And we say the close. Okay, now we're going to make a cash sale on the 27th. To a gentleman named Robert Carter. And he's going to buy a skateboard. Buy 2 of them. And he's going to give us cash. Cash sale. So that's $642. Okay, now let me show you what a very common mistake is. There's my sales receipt, but I need to click on deposits now. And look at that. See, I had forgotten on the 20th and on the 27th. Now that's not going to come back and bite me unless I do a reconciliation. So before you do any reconciliation, make sure you don't have any undeposited funds. So let's put our money in the bank. Okay, there's our money. Okay, save and close. A little bit out there, check register. See, right now, according to our check register, we have $35,546.67. Okay, so that's what QuickBooks thinks we have. The question when we reconcile is whether or not the bank thinks that we have that much. Okay, so our next looks like we've made the cash sale for the 2 boards. And now on September 6th, our checking account statement comes. So this is the reconcile. And this is the statement date September 5th. Good. And our ending balance looks like 35594.47, of which $5 is the service charge and $42.80 is interest earned. Everything has cleared. There's that $10 again. Let's see, where we go? $10. Everything has cleared. Okay, so we leave the reconciliation. We go back and we figure out why there's $10. Did I misread that same thing? Reconcile. Okay, I've gone back through and that's an 8. There we go. Alright, I misread the number. So, Looks like everything's cleared. I'm reconciled. Only when that's a 0 do I move forward. And if I need the reports, I get the reports. Finally, it's September 8th, and I'm going to pay my taxes. Vendors, sales tax, pay sales tax. The check date is going to be September 8th. And we're going to show sales taxes due through today. Pay all tax. So there's everything that we have. And done. Okay. Now, once you've done all your transactions, get your reports. Company and financial, profit loss standard. And we're going to go all the way from when we started, which was July, to end of September. It's okay to go farther ahead or behind. There's our profit and loss. Check that for the right answer. Check your inventory adjustment to be 0. Check the interest income. 111.55, that's from our checking accounts. Check your expenses. Make sure there's no other expenses. The only other expense is inventory adjustment. You shouldn't have any numbers here. Okay, cost of goods sold, total income. And if you go over here to save as PDF, save it on your desktop. I'm going to save it as sample final so I can find it again. And I'll say income statement. There we go. Okay, so now I want my balance sheet. I want it as of, say, the end of September. I want a PDF of it. Okay, and then finally, we want the accountant and taxes journal. And that's going to go all the way to the end of September. There's all of the journal entries, PDF. And you're done. At this point, you would take the quiz. I don't know if I'm going to have the quiz ready for you or not. You would turn it in, and that would be a good practice for your final. So work on it. Your final counts as same as 2 Excel tests. So this is a chance for you to get your average up. Have a good weekend, and email me if you have any questions.